Welcome to this second webinar of our tech solution. My name is Martijn van Bommel, and today I'm hosting this webinar about our tech solution we launched in the OneStream PartnerPlace. We already had a webinar regarding the Pillar 2 capabilities of our solution, and today we are going to show you the tax reporting side of things. If you have any questions, please type them in the Q&A box, and we'll answer them, of course, accordingly. With me are Petter Verretov, Principal Consultant at MCO Solutions, and Tim van Nude and Mark de Jong, both are partners at the ATC. And together we developed the Advanced Tax Connect, as we call our tax solution in OneStream. First, I will give you a short introduction of our company for the ones who don't know us, and Tim will introduce ATC. And then we kick off this tax webinar. MCO Solutions provides an end-to-end CPM solution services to support you in the whole application lifecycle of OneStream. That means from advice to implementation, training, and support. We help our customers wherever they need us. With more than 240 OneStream projects under our belt, we are able to bring these best practices to all of our customers. This made us become a OneStream development partner and develop specific solutions like lease accounting and now tax reporting, including Pillar 2 and country-by-country reporting. I will hand over to Tim for the introduction of ATC.
ATC is founded in 2007 and basically can be divided into various departments. Our first department focuses on the tax knowledge side of things, so we support multinationals with their tax accounting and reporting processes, with interim services, but also compiling their corporate income tax returns. Then we have the automation part, so we focus on finance and tax automation, integration, and streamlining all the processes around those two service lines, and where we focus, for example, GRC reporting, Pillar 2 reporting, global tax reporting, and ESG. And that combined with our smarter division that focuses on artificial intelligence and machine learning and virtual employees, we can provide end-to-end tax knowledge and finance automation services to our clients. Then on the next slide, what we present is the cooperation between ATC and MCO. So as mentioned, we are primarily focusing on the tax and finance knowledge, and MCO is experienced with the technical side of things of OneStream. And that combination is really powerful and turned into a cooperation to leverage our into the OneStream platform. So together we created Advanced Tax Connect, of which we're going to show the tax reporting module today. And basically, that solution is a combination of all the tax relevant knowledge combined with the OneStream native technology behind it, and that's what we're going to show today. And then we're going to do a deep dive first into the solutions that we've set up. So Advanced Tax Connect. Advanced Tax Connect is recently launched. So during Splash Las Vegas, OneStream officially launched the PartnerPlace solution, which Advanced Tax Connect was one. The module consists of 3 solutions, being country-by-country reporting, Pillar 2, and global tax reporting. The reason why we've launched this module is that we identified that most solutions and modules implemented or available on OneStream are either accelerators, blueprints, or starter kits. And as the world of tax is already complex enough, the customer has to co-develop the solutions that are supposed to help them in the future. However, we see that this results in suboptimal, error-prone, and maintenance-heavy solutions that still require a lot of workarounds, especially for tax. And that's why we decided to take our tax reporting solution that has been running for more than a decade at a lot of multinationals and leverage that IP on the OneStream platform. All the solutions running within the module are connected. So for example, the CBC data is used to determine the transitional safe harbors for Pillar 2. The Pillar 2 results can be recorded into the tax reporting packs and the other way around. And depending on the solution that you would like to have within your OneStream setup, more and more can be connected and start talking to each other. If we go if we zoom in one level deeper, then we see that the various modules are explained. As the focus of today is around tax reporting, I will explain a little bit more about the module itself. The module that we have leveraged on the OneStream platform and which has been running for over a decade is set up in a way that it actually helps local controllers with limited tax knowledge most of the times to calculate the tax implications based on information that they actually know. So what we saw was that, for example, other solutions in the market were primarily focused on US GAAP and therefore required a workaround for IFRS. And they are considered to be a black box as you put in numbers and it is not sure how these numbers eventually end up into certain calculations or results. Our module starts with a questionnaire asking a user simple questions around the situation. So for example, do you have permanent differences between group GAAP and local GAAP or between local GAAP and tax? And depending on how you answer certain questions, the system shows or hides specific schedules and specific parts of these schedules. This approach assures that the user is not bothered with all kinds of forms or big schedules and that do not make sense for the complexity of the entity. If in the future the complexity changes of an entity, the user can simply set another question to yes, and suddenly the user can complete, for example, a text-based balance sheet to record group to tax differences. We help the user. We ask local currency, gross amounts, and applicable rates, instead of asking to reconcile an ETR or calculate the change of tax position. The solution will actually do that for you, based on the information that you know and you've completed in the module itself. As the module is a result of the combination of content and OneStream skills, Petter is going to say a bit more on where this module sits within the OneStream platform. From there, I will do a short introduction to the demo and hand it over to Mark, who will perform the actual demo.
Thank you, Tim. Hello, everybody. The Advanced Tax Connect solution was developed with the use of standard OneStream functionality and components, and it is based on a combination of OneStream metadata, dimensionality, and a few custom tables. It is important to outline that the tool is configured in such a way that tax-related data is stored in separate cubes, so that the clients already using OneStream do not need to worry about their existing setup and data being affected. This ensures a clear separation between financial and tax data and enables a straightforward split in security setup and data access. We currently make use of two cubes, one for tax reporting and another for country-by-country and tax pillar 2 setup. The solution does support copying of data from the finance setup within OneStream to the tax cube to be used as a starting point for data gathering. Data points from the financial model are mapped to the tax model via inbuilt mapping table. It is also possible to import data from external sources using the standard OneStream data load and transformation functionality. This tax solution does reuse the client's entity structure in OneStream if available. However, the entities need to be grouped into an alternative hierarchy to roll up into corresponding jurisdiction levels. The rest of the dimensional setup is specific to the solution. We use workflows and dashboards to guide the data gathering process and member formulas in combination with business rules to support the calculation engine behind the solution. Parts of the setup are flexible to ensure that it can be tailored to a client, and these need to be configured during the implementation process, similar to how you would implement OneStream for financial consolidation, planning, and other processes. These include setup of the jurisdictional hierarchy in the entity dimension of the client, and also setting up the workflow structure based on that jurisdictional hierarchy, setting up security based on specific requirements for the client, setting up the tax-based balance sheet, permanent difference account, tax and pre-tax other temporary differences, and also configuring the mapping of financial data into the tax accounts for the automatic data copy if needed. This is a short overview of the backend of the solution. Back to you, Tim.
All right, thank you. Before we go into the demo, we first explain what's in the solution, give you a high-level overview of the various schedules and then explain what are we actually going to show during the demo. Because as you can imagine, this is a complete end-to-end solution. So that means that we have a lot to cover, but within the webinar we will show you the highlights of it. The solution is basically divided into 3 parts: a questionnaire, an input schedule, and automated reports. And as mentioned before, our model starts with a questionnaire that determines what schedules are relevant or what sections should be open or closed. And when we look at the input schedules, you can imagine that we have a lot of different schedules. So let me explain a little bit about the core of the solution. So the backbone of the solution is the current tax charge calculation for P&L and equity. And it starts with the profit before tax, which can typically be automated from the financial data. From there, we move into the permanent differences, depending on answering these questions, of course. These can be accounting and or tax accounting, tax permanent differences. And again, all elements can be automated when that data is available in the environment. When we get up to the movements of the temporary differences, you will see that these numbers flow from a tax basis balance sheet. This is built up as a balance sheet, where per balance sheet caption, you are able to record positions in local currency gross amounts. And on a line-by-line basis, you can record whether the position is taxable or, for example, whether it goes to P&L or equity, and record the specific positions. We see that most often certain group values are automated from the financial information. After this, the loss compensation and addition can be applied by using the loss and carry forward schedules within the solution that allow a recording on a year-by-year layer, including the expiration of these losses. And finally, after prior year adjustments, credits, and other tax-related items, we end up in the reported current income tax expense or income for P&L as well as equity. All information that has been completed in the input schedules are automatically picked up by the various reports, like, for example, a deferred tax overview, the ETR reconciliation for P&L as well as tax, and the total tax summary. Furthermore, there's a CIT, payable and receivable overview available in the system. All information that has been completed in the schedules are picked up, calculated, and provided with all kinds of controls around it and checks with the ERP system. During the demo, Mark will provide a high-level overview of what I've just explained and will especially focus on the numbered items you see on the screen. Without further ado, let's switch to the demo. Mark, I'll give the word to you.
Yeah, thanks, Tim. Let me switch from the presentation directly to OneStream. So, as Tim mentioned, the solution within the OneStream environment consists of 3 elements, which is tax reporting, Pillar 2, and CBCR. As you can see in the tax solution cockpit, which is currently on the screen, you can access them directly from here. And of course, today the focus will be on tax reporting. So once we go into tax reporting, what you will see is that it pops up a hierarchy of your structure, where you can select the time, you can select a certain scenario, and of course you can select the entity for that specific for a specific reporting entity. And as you can see here as well, different entities based on the hierarchy set up will be structured into or a tax group or a region, a country, or a global overview. So, for example, if you look at the group NL review, what you will see is that there are quite a lot of entities in it, and those entities will roll up within this group, being the tax group in the Netherlands. It will be combined with, for example, Italy, and in the end up into a global overview in the solution. What you will also see is that there are different colors used in the hierarchy or in the structure, where based on the color of the icons, you will see in which stage of the process you are. So, for example, if it is a grayed out position, it's still ready to be started. But if it's, for example, green, it's submitted. And that process is completely built in with the native OneStream functionality around that workflow. So What I will do is enter a local text spec, and then in that text spec exactly show you what Tim showed on his slide with the different elements, with the questionnaire, with the input schedules and the reports. I will show that actually in the OneStream environment to guide you through that, of course, high level. So when I jump into a solution, I select it in the hierarchy, I make sure that my time and scenario is correct, and I select Go. And once I do that, it opens up the entity itself. And it's good to, before we jump into the schedules itself, it's good to mention that that questionnaire Tim was referring to is on the screen now. And what that questionnaire will do is basically make your tech spec tailor-made. So once over the years the tech spec was developed, and as Tim mentioned, it's there for more than a decade and running at multinationals already. What we find out is that data gathering process is often a process performed in countries by local controllers, not per se tax experts, making sure to make sure that we gather all the information correctly, but without creating a big burden with a lot of schedules. We came up with a questionnaire, and based on that questionnaire, the tech spec, as said, is tailor-made for that reporting entity. So, for example, if you have quite a straightforward reporting entity with only permanent differences, you will only be, let's say, bothered with a limited set of schedules, which means you will get your current income tax, your current income tax calculation, for example. You will get a section for permanent differences. You will get your current income tax receivable payable overview, and the reports which are generated automatically for each and every reporting entity. Which means that for the data provider, it's not a really detailed tech spec to go through all the different schedules which are not applicable and which can confuse the data provider to get the data in. But if your entity, for example, is more complex or your entity is growing over time, it's just a matter of answering a few additional questions with yes. And if those questions are answered with yes and you submit those questions, then the tech spec is expanding with the answer of the questions. And around those, it's good to mention that around those questions, there are quite a lot of validations in the platform as well. So it looks at the combination of certain questions. It looks at roll forward data from previous periods or enter data from previous periods. It's checking whether all questions are correct, and once all are correct, you can submit and then go to the input schedules for more detail. So, as mentioned by Tim, the questions are divided into sections if there are permanent differences, and then focusing on is there a group gap to local gap difference or a local gap to tax difference. In this scenario, so in this demo, we will have one section available there where between local gap and tax there is a difference. Other questions, as you can see on the screen, are related to temporary differences, and that really focuses on tax basis balance sheet. And I will go into the details in the solution, of course, where you, for example, also have the option to have recognized or even unrecognized temporary differences. So if you answer the question on unrecognized, for example, with no, you will not be bothered with additional columns on your tax basis balance sheet to de-recognize or unrecognize a certain book to tax difference. But if you have them, it's just a matter of entering the question with yes, and it will update your tax basis balance sheet accordingly. What you will see as well is that there are questions around losses and other carry forwards. So do you have, for example, net operating losses carry forwards or other? And again, are they recognized or unrecognized? There's a specific schedule for excess of interest. So for example, a lot of countries have earnings stripping rules, and there's a specific schedule for that in the solution as well. Same goes for tax credits, where it's divided into withholding tax credits or other tax credits. And there's also a section for other temporary differences. So think about output-based differences or other timing difference related items which you can report on those schedules. And it's good to know that those schedules support both pre-tax as tax entry directly. Then there is a item on the calculation of deferred taxes. So by default, the tool is picking up the percentages from the cube view. So in a cube view, there are the text percentages for all the entities. It's picking up the statutory rate there, opening rates, closing rates. But what you will see is that that's by default. But if you want to deviate from that, for example, because of a certain timing difference which should be calculated against, for example, a local rate or against a blended rate, or for any other reason, a different rate from, let's say, the standard rate, then the tool facilitates that on a line-by-line basis, you can deviate from the standard rates. And I will show you later on in the demo as well how that is done. And then last but not least, there's a question on equity and OCI. So if you answer that with yes, then basically within the tool, also a whole reconciliation of equity and OCI will be visible and available for you, which also means that, for example, from the tax basis balance sheet, from the lowest level, you can determine whether a pre-tax movement runs through, let's say, P&L, or let's say equity or OCI. And depending on that selection, within the tool, the tax effects will also be allocated to that specific area. What you will also see if you answer this question with yes, is that you get a whole equity overview where it not only picks up, let's say, the profit before tax in the current tax charge calculation P&L, but it will pick up, for example, the equity movement before tax in the equity and OCI overview, and really breaks it down into, okay, is this an item which is permanent, or is this an item with a temporary character, or is this an item which will result in a current income tax effect, which will then, of course, be allocated to equity as well. So that is the short intro on the questionnaire. Once you submit that, you will see that all questions are saved. And if you from there then go to the first area of each local tax pack, because please remember we're still in a local tax pack of a reporting entity or a legal entity, or depending on how you, of course, set up your structure. What you will see here is that we start with input schedules. As Tim showed in the visualization of the tool, is that there are input schedules. Those input schedules mostly ask for pre-tax local currency values, which can be automated towards a finance cube or external data, or can be entered manually. As you can see here, in the left end of the screen, you will see that below the input schedules itself, there are specific schedules, and it's 10 schedules in total. You will see that those schedules have different colors. That means that, for example, if it's a complete orange color in that block, you're on that schedule. If it's lined with orange, it's a schedule which is available for your reporting entity based on the answers in your questionnaire. If it's a grayed out or a gray lined schedule, for example, the other temporary differences in this overview, then it's not applicable for you. So you don't have to go to that schedule. You don't have to enter like a 0 or to save the schedule or to recalculate the schedule. It's just not applicable for you. If, as said, your reporting entity increases, or if there is more complexity in your entity, it's just a matter of going to that questionnaire, answer an additional question with yes, and it will then show that additional schedule. So the current tax charge calculation P&L is, let's say, the backbone of the solution, where you start with your profit before tax. So in this case, we have like a 5 million profit before tax, which is there for group GAAP. And as we answered quite a few questions with no, there are no permanent or temporary difference between group GAAP and local GAAP. And as you can see on the schedule, you will also not bother with the area to report those numbers, because there are no differences there, so why bother the end user with a whole set of rows to report those numbers? So as you can see, group GAAP, local GAAP are equal, being 5 million. And then you will come to a section first with tax permanent differences. So all the captions you will see in tax permanent differences can be customized based on implementation. So during the implementation, those captions will typically be customized. If you have less than the number on the screen, for example, now, there will be less rows visible. If you have more, there can be more added as well. And they're divided into additions and deductions. What you will see here is that you report the numbers manually or link them to certain accounts from your finance cube or from external data sources. What I've done now, I've entered a amount for non-deductible interest, and I put a comment on that it's a non-deductible based on a ruling with the tax authorities, for example. So the tool allows you to report a number, to get a comment, but it will also allow you to use all the OneStream capabilities or functionalities to, for example, add a document. So by right mouse clicking on the comment section, you can add a document to it. For example, a ruling with the tax authorities, you can add it directly there, which means that if at a later stage it is reviewed, that you can directly, during the review process, see that document, review the document, and basically approve the tax spec or the position there. In this tax spec, as said, starts with 5 million. We have a group and local, which is equal. We have 2 additions as permanent differences, which results into a 750 addition towards my taxable result. There is 1 deduction as well, which is a other non-taxable income, which is reported there. And from there, it calculates a total deduction of 425. And what you will see then is the section for tax temporary differences. And as you can see there, the color of that 150, which is on the screen as a temporary difference, the color differs from the input colors, which is a blank cell with a blue lining around it, or a blue overview. As you can see, the color is different, which means that the information here is not entered locally in this file or in this schedule at this place. And also shown by Tim on the visualization of the tool, that's coming from a tax basis balance sheet. So all the temporary differences within the tool, whether it's a group to local difference, or it's a local to tax difference, or it's another temporary difference, it's all coming from supporting schedules which completely detail your movements. So in this case, there is a intangible fixed assets, for example, as a tax temporary difference. It's a completely recognized item, and it's coming from a different area. If we go to that different area, that would be the tax basis balance sheet. And in the left-hand corner of your screen, you can, in the navigation pane, go to the tax basis balance sheet. And if you open up the tax basis balance sheet, you will see an overview where, of course, based on your required structure, have an overview of all your assets and all your liabilities. All the captions can, of course, be adjusted accordingly to preferences and can also be extended or limited based on preferences. So what you will see in the tax basis balance sheet, before going into a bit more detail, is that you have your captions. You will have a few selection criteria, and I will go into that later. But what you will then see is that you have an opening balance with a group GAAP value, a local GAAP value, in this case, recognized difference, or potentially a permanent difference, and then you will have a tax base. That will be there for opening balance, and of course, during implementation or during the first use of tax spec, you enter your opening balance. But as of that moment, the opening balance will be a roll forward. The numbers are picked from or the finance or the tax cube, depending, of course, on what number it is, and cannot be altered directly in the tax spec. So opening balance will be a given at a certain point. Then what you will see is that you have closing balance, and then from that closing balance, the tool is creating like a movement schedule. That movement schedule is then showing you specific movement captions, being a current year movement, either equity or P&L, a prior year movement, either equity or P&L, and balance sheet movements. And it will also display if there is a permanent movement, for example, and in this case, between local and tax. If we then go a bit more into detail, for example, if we look at the intangible fixed assets, which resulted into that timing difference on our current tax charge calculation, if we open it up, what you will see here is that the tax basis balance sheet facilitates more detail. So the total number from the caption you saw on the screen, which is a 450 for group GAAP value. And by the way, group GAAP and local GAAP are assumed to be the same because of those answers to the questions in the questionnaire. And what we typically see there is that the line to be specified or the line automated that will be linked to your finance cube, where the group GAAP number will be picked up. The group GAAP number, local GAAP number, and tax number for that line are assumed to be the same. And if you want to deviate from that, so in other words, if you want to create like a book to tax difference, or if you want to create a permanent difference on that item, you can use the lines below, where you have the possibility to create like a tax specification, how it's called. So in the tax specification, what you will see is you have the option to, on a line-by-line basis, set a few qualifications. So you will set if an item is taxable, non-taxable, which in the tool means, is that book to tax difference a temporary or a permanent movement? If we set it to taxable no, it will automatically allocate it as a permanent difference instead of, for example, a recognized timing difference. Next to that, you have the qualification being, is this a P&L or an equity item? And from a drop-down menu, you can select whether it's a P&L or equity item, where as a result, the tool will, for the tax calculations, also allocate those tax calculations to either P&L or equity. If, for example, in the questionnaire, equity is answered with no, then in this drop-down menu, you only have one option being P&L. So let me select P&L. The other option will be to get like a tax specification description in. In this case, I use as an example purchase price allocation 1 and purchase price allocation 2, which also demonstrates that you can really break it down depending on preferences, depending on details available. But also those lines, of course, can be linked to certain accounts in your finance cube or external data sources. In this case, we put like a group cap value opening in for 300 and 150, which is assumed to be the same for local cap purposes. And what you will see that the tax base for those items is 0. That's there for opening balance. You will then see that for the closing balance, the numbers are entered as well. And depending on the movement on the recognized item, you will directly see that in the movement schedule, it's allocated to current year, unless you make a deviation for prior year adjustment or link a prior year adjustment analysis to it, or report certain numbers as balance sheet movements. And to demonstrate what the effect of the questionnaire is, for example, what you can see now is on the closing balance, we have group to tax difference, local GAAP is the same. We have a tax base of 0. Based on the qualification we gave on a line-by-line basis, it's recognizing the full difference as a recognized difference. And there's no option to, let's say, unrecognize a certain part of your timing difference. If you now would go to the questionnaire, and in the questionnaire, go to the section for temporary differences and answer an additional question with yes. And that additional question will be, do you have unrecognized temporary differences? If you then submit and go back to the tax basis balance sheet, so we go then back from the questionnaire directly to the input schedules. From the input schedules, we select the tax basis balance sheet. It then brings us to the tax basis balance sheet. If we then open up the intangibles again, what you will then see is that you have the option to de-recognize or to report an unrecognized part of your timing difference. For the purpose of this demo, I will not go into all the details and show you what the effects are, but keep in mind that with entering data in the input schedules, the reports are created automatically. So if you unrecognize a certain item here, and that should have an ETR impact, the tool will make sure that the proper tax effect in the ETR is reported as a movement, for example, in unrecognized. That's, of course, available for opening balance and closing balance. But what you will also see with the movement analysis is that also for the movement analysis, there will be a movement analysis for unrecognized on the tax basis balance sheet. As a result of the tax basis balance sheet, with this scenario, we have the 150 difference on the intangible fixed assets. That 150 difference is, of course, reported on the current income tax calculation. And if there are more items coming up from the tax basis balance sheet, like tangible assets or other assets or liabilities, you will see that there are visible on the screen as well. What you will then see as a next stage will be, for example, that schedule for excess of interest to calculate your taxable result before loss compensation and other carry forwards. In this case, the 5, 4, 1475, which is on the screen. And since those areas are not available for your entity or not applicable for your entity, the underlying schedules are grayed out. Next part of the solution, besides the possibility to transfer in or transfer out certain taxable results, and that's, for example, an option if you are in a tax group or you want to transfer specific results to an entity which calculates the taxes for your organization or for your tax group, you can use those areas. And what you will see then is that there is a section for ordinary tax losses, for other carry forwards or other carry forward effects. And that is also a area which comes from a different schedule. So in this scenario or in this tax spec we have, you will see the 1,065,000 difference as a utilization of losses, and that's coming from a loss overview. So if we go to the loss overview, what you will then see is that on the screen you will see your overview for total losses and carry forwards, and you will see that there is a year-by-year layer in that schedule as well. So it starts, of course, with the underlying year and then goes down to, in this case, 2013 and older. And what you will see is that depending on questions, you will have the option to unrecognize certain areas or to recognize certain losses. And the build-up from recognized losses and unrecognized losses results into a pre-tax opening balance for the available losses. Those are reported on a line-by-line basis, being a year-by-year layer. And from there, you can determine which amount should be added to your losses. For example, if the underlying year is a loss. But what you will also have, of course, the option to utilize losses. So what we've done in this scenario, we've completely utilized the loss for 2021 against the result for, in this case, the 2023. And we utilized part of the 2022 result or loss, which means that in total that 1,065 is utilized during the year. And what you will see here as well is that on this schedule you have specific movement types available for you for expiration of losses, for prior adjustment of losses, or all kind of balance sheet movements. And that results into a closing balance, and that closing balance is still the pre-tax local currency amount of losses as a complete number. And then from there you can determine which part of the losses are unrecognized and which parts are recognized. And then, of course, the tool will use the column recognized for the calculation of your deferred tax position on it. There's also a section where you can report a year of expiration. And then that year of expiration, of course, is linked to the specific years in the schedule and can be used, for example, for your disclosure notes or for your reporting to demonstrate there which amount of losses will expire in a certain year, or where you can also use that unrecognized column for is to disclose which part of your losses is unrecognized, for example. There's also a section for comments, of course, and what you will also see on this schedule, depending, of course, on which numbers are reported, is that if you report unrecognized numbers, it's also validating if the year-by-year unrecognized position equals the total movement of unrecognized during the year. So if we from here go back to the current tax charge calculation, we will see that 1,065,000 is picked up there as loss compensation. And yeah, still keep in mind, we're still talking pre-tax numbers, local currency values, where we went from a profit before tax for group GAAP to a profit before tax for local GAAP. We have the tax permanent differences, which are reported in the current income tax charge calculation. We have the tax temporary differences, which come from the tax basis balance sheet. We have the option to have all kind of step outs towards excess of interest, other carry or other temporary differences or losses, for example. And then we come to a taxable amount in P&L, which is in this scenario the 4410 on the screen. It picks up the applicable tax rate from the cube view with all the tax rates in for all the entities, and it calculates the estimated current income tax expense or benefit. Then there are areas to report, for example, withholding tax losses or tax credits, R&D, other tax credits, other temporary differences with the tax amount. but also, for example, other income taxes. So if you are in a country where there is like a federal tax and a state tax, or there's like a national tax or a subnational tax, the regional or subnational taxes can be reported on other income taxes, and there is a specific schedule there where you can report the base amount, you can report the percentage used in that specific region or canton or state, for example, and then it calculates the total effect. Also referred to by Tim, the interaction with Pillar 2. If from the Pillar 2 modules, for example, a income inclusion rule or a QDMTT number should flow to this entity, you can set up that connection between the two, and then you will see that your income inclusion rule will show that, in this case, 65,000 in your overview. And when completing all those areas, and as you can see here as well, there are the blank cells and the blue cells. Blue cells are coming from underlying schedules, and the blank cells are coming from this schedule itself, where you report the numbers, and you can, of course, always get comments in or add documents. And to facilitate, to demonstrate what also for schedules the use of, for example, the questionnaires, is that in this case, tax credits are not available for this reporting entity and not applicable for this reporting entity. If we would go back to the questionnaire, we go to the section for tax credits, we would answer the first one with yes, it's mandatory to also answer one of the additional questions with yes. If we would now submit, for example, it will block us from submitting. So in this case, we will also select withholding tax credits as a yes. We will then submit. Then what you will see is that it's saved, and after save, when you go back to the input schedules, you will see that in those input schedules, the tax credit schedule will also be visible for you, and that schedule has the same look and feel as, for example, a loss overview, where on a year-by-year layer you can put your opening balance in, or you can roll forward your opening balance there, and you can put your movements in. So that demonstrates basically how the questionnaire makes the pack tailor-made each and every time. Also in if you would increase over time or complexity increases, or you have a more complex entity. What you will then see is that the taxable amount for P&L is picked up, the total tax charge is picked up by the current income tax receivable or payable overview. And on that schedule, and we can go there by clicking in a navigation pane to the current tax receivable payable overview. What you will see in that schedule is that it is divided into current income tax and Pillar 2 pop-up taxes. So there is a complete overview here, where on a year-by-year layer, you will see your opening balance, you will see your movements flowing to P&L, you will see your equity movements, you will see balance sheet movements there as well, where you can, for example, get your payments in or link your payments based on a movement type from your finance cube, for example, and then resulting into ending balance. That's there as set, that's there for income taxes, but as you can see at the top, we can also use those buttons to go to specific areas. So for example, if we would go to the Pillar 2 pop-up tax overview, what we will see there is that the 65, which was flowing from our Pillar 2 solution to this tax pack, to the current income tax calculation P&L, is also displayed here on this year-by-year layer overview for Pillar 2. As you can see here, there is also an option to have a current income tax compressed, which means that the opening balance is just one netted number for the total opening position. But if you, for example, would want to see more details, or you have the you need to report, for example, the receivable and payable separately, or you have the mandatory requirement to split it into non-current or current, for example, you can see the more detailed view of it, and in that more detailed view, you will see receivable current and non-current, payable current and non-current, and that's that functionality of the additional buttons at the top. What you will then also see is that on the schedule, you have the option to report prior year adjustments, for example. So on a year-by-year layer, you can report those prior year adjustments, and those prior year adjustments, in this case 250, will flow through the current tax charge calculation and will be also here available as a prior year adjustment, where on the underlying schedule you'll see all those year layers. So basically there are options as well, as you can see, for Pillar 2 prior adjustment if applicable for a certain year. There are other corrections possible there, and basically that sums up really as high level as possible, but still with a bit of detail to show you what the capabilities of the solution are. That will end up basically the input schedules. So as a user, you're now completed with getting all the numbers in. You have completed all your input schedules. You reconciled everything here from pre-tax local currency values, except for the tax numbers on your current income tax receivable. And then what you will do is go to the report page. So we've looked at questionnaire, we looked at input schedules, and now we go to the report page, still per reporting entity. So we're still in that reporting entity or legal entity tax pack. And in that area, there are reports as well. So what you can see here, there is a set of 3 reports in this overview. First one is effective tax rate reconciliation. Second one, deferred tax overview. And the third one is a total tax summary. The effective tax rate reconciliation shows, obviously, from Group GAAP with the statutory enacted tax rate picked up from the cube, the estimated tax charge, and then obviously goes to the total tax position, which runs to P&L. As you can see here, there's also a section for equity, because we answered that question on equity availability or equity applicability on yes. Then there's a whole section which also creates an ETR for your equity overview. And as you can see here, everything is automatically created based on the input schedules. So by asking the correct information in input schedules, pre-tax local currency, by combining it with the tax rates from the cube view, it's creating a effective tax rate reconciliation where it shows you your permanent differences, it shows you potentially temporary differences with an impact on your ETR, it shows you your Pillar 2 positions, but also your other income tax positions and your prior adjustments to result into actual tax charge. What you will see as well is that the tool creates a full deferred tax overview. On that full deferred tax overview, you will see all the lines available, where on that tax specification, you will also see that purchase price allocation 1 and 2, where you see the opening balance for your deferred tax liability in this case. You will see the movements towards your P&L. You will see the movements towards equity and OCI. You have balance sheet movements to end up with a closing balance. What you will see here as well is the same for losses. Since we have losses available and we have a utilization of losses, you will directly see in this overview that the deferred tax positions are in a detailed level available for you. If you want to see, for example, more details, because of course you don't want to be a tax reporting solution, a black box, you want to see where your numbers are coming from, you can, at the top end of your screen, click details. And what you will then see is next to the calculated deferred tax asset and or liability, you will also see the group cap value, your tax base, the recognized item and the unrecognized item, all from your tax basis balance sheet. So it is therefore really transparent to see, okay, what is my, where is my difference coming from? Is it related to a tax only item? Is it related to a group cap value, for example? So that ends up the whole tax base or the whole deferred tax overview. Then there is a total tax summary. And in that total tax summary, and that's typically if I would do a review of a tax pack, I would typically start with the total tax summary, because at a total tax summary, basically, and of course the name says it all, but all tax related items will be summarized on one sheet, where it starts with an opening balance for all items within the tool. So think of book to tax differences, where a DTA or DTL, so a deferred tax asset or liability is reported. You have your other timing differences, excess of interest, the carry forwards, withholding taxes and other tax credits, but also, for example, your income tax receivable payable, your Pillar 2 capabilities of reporting netting there as well. And then from that opening balance for each and every account, it's creating your reconciliation from opening balance via P&L movements via, if applicable, equity and OCI movements, balance sheet movements, where, for example, in this scenario, you will see your assets and your payments done for your current income tax position. You will see your balance sheet movements for all the other items. You will see a change of tax, and you will see a closing balance. Two things good to mention is, one, if you select detailed again, you will come to a view where the opening balance is divided into, for example, deferred tax assets and deferred tax liabilities, where your current income tax receivable or payable is split into a receivable or a liability, and that gives you a bit more detail on, let's say, the netted opening balance on this overview. And to demonstrate you as well how the tool works and what the benefit is of having pre-tax numbers in input schedule, as you can see in the current or in the effective tax rate reconciliation, there was no, let's say, ETR impact on timing difference, because there was no change of tax, because we used the same statutory rate as the deferred rate, for example. If we now, within the OneStream platform, jump into a cube view where all the percentages are centrally managed, and if we open it up, and we would see that we, for this reporting entity, for example, change the deferred closing rate. So in this case, let's assume that there was a tax law enacted, and the tax law enacted percentage for the next year will be, for example, 20%. Then what you will see is that if you, in the cube view for centrally managed tax rates, change that into 20%, you go back to your tax pack, back to the tax pack of that reporting entity. So we're now basically back in the same reporting entity where we were before. If we then would recalculate, and then of course OneStream tells us that we have to recalculate, we have not changed anything on the input schedules, obviously, because it's all pre-tax local currency values. If we then go into the report area, what we would see there is that now there are change of taxes popping up, and those change of taxes are there because of that change of our enacted deferred closing rate from 25 to 20%. So what you will see in the ETR, that it's picking up those change of taxes directly, divide them into is it on book to tax differences, or is it on carry forwards, or potentially, if it's flagged as an equity item, is it an equity item? And that results into a different total tax charge. Of course, also on the deferred tax overview itself, it shows you the column for change of tax, where you will see that the change of tax is reported there as well on a line-by-line item, and it's completely splitting it as well on the tax specifications, so that purchase price allocation 1 and that purchase price allocation 2. And if you then finally go to the tax summary, you will see, of course, the same. You will see that there is a change of tax, but I also wanted to show you that on that tax total tax summary, next to the fact that we're reconciling in the two opening balance to closing balance with all the movements, we're also building up the total tax in P&L and or equity by at the bottom end of the screen show you the current income tax expense, how it's built up. So what's the actual number for the year, what's the Pillar 2 number, what's the prior year adjustment, and or other differences. And it will then show you what the impact is of deferred taxes and how it reverses out certain items from your current tax charge calculation to, in the end, come to your total tax expense, in this case, the 1,719,400, which is built up into current year, prior year, and potentially other movements. And that, of course, ties in with the number in your effective tax rate. So that basically ends up the demo of the tool itself, so the actual tax pack. And what I wanted to show you as well is that from there, of course, you can use the functionality of OneStream to group those items within a report. So, for example, if there are 20 entities in your, in this case, NL tax group, so it's called a fiscal unity, or you have group relief in the UK, for example, you can structure it that way that then those entities are grouped into a reporting part of it. But that's all because of the data is structured and available in the system. And to sum up that part of course, the webinar and therefore the actual demo of the solution, there's a local text pack per reporting entity or legal entity. It starts with a questionnaire to tailor-made the entity-specific pack. Then you have your input schedules to mostly report pre-tax local currency values and numbers most data providers actually know. Then the tool itself goes to the report, and in the report, all the calculations are done and not as a black box, but really transparent to also show you which pre-tax numbers are used, which percentages are used to come to a specific item on the tax balances, for example. So that sums up my the demo of or my part of the demo, and I will now I think hand over back to the other guys.
Thank you, Mark, for this clear overview and the demo of our solution, of course. Thank you all for joining this webinar. You will receive a replay of this webinar automatically in your inbox. If you would like to receive a replay of our Pillar 2 webinar, or you have any additional questions, please reach out to us, and we're happy to help you. So on screen, you will see our email addresses. So reach out, we help you, and enjoy the rest of your day. Thank you very much.